Hi, this is Shelly Craft, and welcome to SNNLive. We're in the BioMaryland booth at Bio International in Chicago 2013. With me is Mr. Seth Yakatan of Katan Associates. He's a speaker on a panel at the conference today. Welcome to SNNLive.
Thanks for having me, Shelly. I appreciate it.
It's good to have you. So, tell me what you're speaking on today, please.
So today we'll be speaking, I'm on a panel of 5 people. We'll be speaking about financing strategies for smaller companies, specifically those that are private and those with less than $100 million in market capitalization.
The market is filled with those companies. What's going on today that's not always available, that has been available in the past?
Well, that's the preponderance of the market. You know, it's much easier to work with bigger assets. We always like to say that size opens eyes, and the bigger something is, the easier it usually is to work with. But, you know, at the smaller end of the market, we're still seeing, for publics, a lot of registered directs and pipes being done. We're still seeing a number of partnerships being done, although at a lower frequency than has been done historically. We're still seeing a fair amount of M&A activity. So it's robust for the right assets, I think. And, you know, that's kind of what we specialize in, is in helping smaller companies and representing them. So.
Well, what about the private companies that can't do a registered direct? They could do a DPO of some sort, or a score, or some other form of financing. But what's going on in that market, even though there's a Jumpstart for Jobs Act going on, and crowdfunding, you hear everything about? I'm just throwing a few things out.
Well, you know, I think that's there's a lot of answers in that question. On the venture side, I think venture is difficult to find. In my opinion, VCs are investing in their own projects and their own ideas and things that they think are relevant. You're not knocking on a VC's door and they're funding your business plan. So that's still tough. I think a lot of it in that business is also who you know. Have you done a company before with them? Have they invested in you in the past? Do they understand and trust you? A lot of people that we see still rely on grassroots, angel investment, grant capital, founders' money. There's a number of regions and states, domestically and internationally, that will provide incentives for people to relocate. We still see people that have something which is novel, doing reverses into shells and then doing something based upon that. So, you know, there's pockets that are out there, but it's certainly not easy.
What about how the Jumpstart for Jobs Act was designed to help these small companies? How do you see that? Obviously, for most part, at this interview, they hadn't given guidance yet from the SEC. But in all expectation, how do you see that helping these small companies?
I think it's going to be challenging at best. The last bit that I saw on that was if you wanted to raise anything more than $1 million, you had to have audited financial statements. I don't know any companies that have, that aren't public, that have audited financial statements. That's a $30,000 exercise. So, you know, if you're starting something, I think it's difficult. I also think that justifying the value proposition is challenging in that market as well. If we're going out and raising money for an app or for a consumer product, that's a little bit easier. But justifying the valuation for something which is so early and then assessing, you know, an investor return to that, where you're going into pure speculation and research, I think it's challenging. So, you know, when the Act first came out, we thought it was going to be a boon for a lot of companies, and what we're finding is that it's so far been a lot of hype, I think.
So, what's your background?
My background, I'm just a dumb corporate finance guy. That's it. I did 4 years in venture, and then I was one of 16 people that managed a very large portfolio of assets for Union Bank of California. And 13 years ago, I started my own firm with my father and my partner called Katan Associates, and we do kind of a broad-based advisory and consulting work for a number of life science companies in a number of different verticals. And fortunately, we've been able to scratch out a living doing that for the last couple of years.
So let me ask you a question. What is Katan? You're in the business of helping small companies, right? So what do you do for small companies?
That's exactly what we do. We help these companies with less than $100 million in market cap. So, you know, we screen about 600 or 700 opportunities a year. They call me Dr. No because I only like about 6% of those. And out of those 6%, we typically work with, maybe 14 or 15 projects a year in helping them to really unlock the hidden value of their assets. Sometimes someone needs a repositioning, sometimes someone needs a partnership, sometimes someone needs to sell. So it's really going in and finding something that we believe is novel with people that we think are, can get the job done, and finding projects that we believe we can monetize. And somehow
you're global, right?
We're global, so we have people on every continent and about 16 people through the network. So yeah, you have to be global in this business. Just look at the countries and the companies that are here. You have to think locally and act globally, is what we like to say. So
I like that line, Dr. No. Ladies and gentlemen, Seth Yakatan of Katan Associates, a speaker. He's on a panel. What's your website, by the way?
It's just KatanAssociates.com. And Katan Associates.com. Shelly, thank you so much for having me. I really, really appreciate it.
It's always good to have you.
It's always a pleasure to see you, my friend.
Say hello to your father.
I will.
Ladies and gentlemen, I'm Shelly Kraft. This is SNNLive. We're at the BioMaryland booth at Bio International right here in Chicago, 2013. Seth Yakatan. Good to see you.
Thank you.